Hi guys, welcome to Crypto Being 101, the home of value and good information when it comes to cryptocurrency trading and investment. And this is the Bitcoin and breakfast show where we trade it and we do not gamble it. And it's been festive season, as you all know. Today is 22nd of December 2025, and the year is coming to an end. And if you believe what I'm saying, you see that most of all your, what will I call it, all your analysts and what so-called you want to call them, they are absolutely wrong about what this bull cycle has been about. And especially if you look at what is going on the chart, you agree with me, BTC is almost the same place we started the year at. If you look at January 2025, you see that we begin the year with the price at around let's say this is January. If you see, this is 1st of January, and the price was around $93,000, and you can see the market is trading at $89,000. We are even below $90,000, and although anything can still happen, but there's not much that can happen within the space we have. We can have the market jump from 89 to all-time high again. That can't happen in the next few days that we have remaining in this year 2025. But like I've always been saying, is the bull run over? Are we in bear market? My theory still remain the same. And what is my theory? My theory is till we break below 75,000, that is when I'll say we are properly in bear market. But are we in a downtrend? Yes, we are in a downtrend. So we're going to be taking a look at all of these and the chart analysis this morning on the show. And thanks for joining me once again. I'm Ahmed Oladmeji Kazim, aka KC the Great, and this is the Bitcoin and breakfast show where we trade it and we do not gamble it. If you've not subscribed to the channel, please and please subscribe, like, and share, and do not forget to turn on your notification bell so you always get notified when I come alive. So what is going on the show or in the market? You see, Bitcoin enters Christmas market window as short liquidations drive mechanical buy pressure, signaling what neutral. Also, you can see that Bitcoin bear market persists. Analysts foresee possibly rally to 97,000 or 107. But now, let us take a look at the chart and see what is going on. If you look at the chart, you see when we drop down to 80,000 and we got an entry around I think 90,000 thereabout. Then we immediately left the market. Then we got another entry around 83,000 before we dropped the market out around 90,000. Yes, it's been what ranging between these 83,000 and 94,000. And if you watch my show, you remember I told you guys that until we destroy 94,000 before we can actually say we are going to see the market move ahead or creating our uptrend back, and we have not been able to do so since I said it. And I think I said that since 28th of November. That is more than 1 month, going to 2 months now, that I told you until we destroy 94,000 before we can actually say BTC is back in uptrend, not even saying we're going to talk about all-time high. But now, what can we do and how can we handle our portfolio for the rest of the year? If you look at what we're doing now, BTC created what we call a sell at 90,000. That's how we should leave the market. You can see I put the red dot there. You all know on this show, when you see the red dot, it means it's a sell. So I put the red dot there, and since then I have not changed it back to green. That means I'm not saying we should get back to the market, although I did not record throughout last week because I was just resting. You know, it's festive period, families and friends, people around, all of that. I just tried to take a time out for myself, but I was like, I need to update you guys with what is going on the market. And if you look at it now, what do we need to do? Do you need to get back into the market? Normally when you have a kicker like this, we always have a market to drop down to around 0.783 Fibonacci or 0.618 Fibonacci before we get in. But I found out that doing that sometimes always mislead the follower or people that don't really have the knowledge regarding trading, that they just listen to signals and all of that. And remember, this is not financial advice, it's just for educational purpose and entertainment. Make sure you do your own research and trade with the money you can afford to lose. So what strategy and I want us to be doing going forward? Anytime we have a kicker, we are going to stay off the market until what? Until we have another buy. And I'm going to show you an example of why I want us to stick to that, so we do not get ourselves confused because we don't know how to trade. We are only following the signal, or we are only building our portfolio. So this is what we're going to do. Anytime we have a kicker, we leave the market until what? Until we have a buyback. That's what we're going to be doing henceforth, because I found out a lot of you, when we have a kicker right here and the market dropped to 0.68 Fibonacci, where I said we can get back into the market, a lot of you got back into the market, but now you didn't know where to leave the market, although the stop loss would have been an 83K, which we have not destroyed. But my problem, what if this market move a little bit higher, then we destroy it and I am not recording? Then it's going to cause a little bit of commotion or a little bit of issues for you guys. So what I've said we're going to be doing henceforth is, you know, we've been right on this show and I want us to make more money. We are going to stick to the simple rules of trading, which is we leave when the market is falling and we get back by when we see buyers are coming into the market. That's what we're going to do. But if you have much experience in trading, yes, you can follow some Fibonacci retracement that I used to give out. But if you don't have much more experience in trading, which maybe you don't know when to get out, even though you are using that, please stick to the simple way of how we been doing it. So with BTC, let me show you what I've been saying regarding that. You can see here we have a kicker. The market dropped to, yeah, we have up, down, okay, it's from here, buy from there. Now you can see we have a kicker right there. Then the market dropped to around 50%, but you can see it still dropped down and even kick out where we would have said we should stay away from the market before start going out. So imagine you're in the market and you buy back around there and the market has still dropped around 5%. You'll be panicking, and that is not good for investor. Let's take a look at another. Here also we have a kicker. The market drop. You can see we have a kicker at exactly 0.618 Fibonacci and the market hit the stop loss. And now even though you retrace, you can see what because the more. So that okay, this is what we'll be doing. Yes, sometimes when it drops to 0.618, or 0.783 Fibonacci, it's always good to buy back. But the disadvantage is most of you don't know how to trade and you don't know when to get out, and that is going to affect you. So what I want to do henceforth, and that will be fantastic for how we're going to be treating our portfolio from next year. Remember, this is for investors and sports traders. If you're interested in leverage, option, margin trading, all of that, you need to join my Telegram and my Discord channel for free signals. But for people holding on to their crypto and all of that, this is what we're going to be doing. Yes, sometimes we might see retracement, but we don't need to worry about that. Let's take another example. Look at this. We got an entry at 110. The market gave us a kicker at 123,000. Remember, that's when I told you to leave the market. Now take, for instance, we decided to buy back at 0.68 Fibonacci. You can see we would have entered the market and lose all that money. So we're not going to be doing that again. We're going to stick to the main rule, which is simple as ABC. Just like what happened here, you can see we have a buy at the top there. You can see we have a buy at the top there, but here we didn't have a kicker, rather we have a pin bar that shows the market is going to pull back before it's going to dump. Now when we had a pin bar, what I was supposed to do, we're supposed to market. Now since we left the market there, do we have a buy yet? No, we do not have what? We do not have a buy. So that's what we're going to stick to on this show going forward. All right, now let's check our portfolio. What do we need to do with what we are seeing on the screen? Let us analyze it. It's very simple. We have a buy there, and we have a pin bar or a dark cloud that tells us the market is going to drop back. Then what do? We leave the market and we buy back at 0.78 Fibonacci. Let me do this. You can see almost at a spot of 0.7 then the pull, then we have a kicker. So since we have a kicker, what are we expect to do? We leave the market and we have a kicker at 90,088. So that means we are leaving the market for good. Yes, it dropped down to 0.6, say move ahead, but it didn't give us anywhere to leave the market. So that means even our entry here would have put us back to minus, and it's going to cause commotion. Why? Because we didn't wait for a confirmation. So now if you're not looking at the chart, we have a kicker, the market has been dropping. Then how do we get back into the market? We get back into the market when we have a kicker with a proper structure. Now, do we have a structure to get back into the market? No, we do not have any good structure to get back into the market. So what we're going to do is Bitcoin is not a buy yet. Bitcoin is not a buy, and that's why I'm still going to leave it in red until we break above these 90,000 or we create a structure. That is when I'm gonna say we can get back into the market. So the market might just pull up to form another push back, then drop down again, or give us a structure. That is when I'll say we should buy. Do we need to get into the market right now? Please and please, it's not a buy yet. Stay away from BTC, even though it's been gaining some momentum from 84,000 to 89. That's about 5,000 points. I know it looks big, but if you're not a day trader, in and out is nothing. You understand? If you're an investor or you're a spot trader, 5,000 is nothing, because if the market should go up with 5,000 and your stop loss is around below the 5,000, it could retrace everything or make it close at 1,000. And if you're an investor or you're a spot trader, taking 1,000 points or 2,000 points is nothing. You need like 20,000 points, 30,000 points, 15,000 points, at least from 10,000, 15,000 points upward. That is what you need as an investor or as a spot trader. Remember, they charge you swap to go in and out. So if the market is retracing and is recovering about 5,000 points, 3,000 points, you do not need to worry at all. Wait for the perfect entry. So Bitcoin is not a buy yet, and I have just shown you why it's not a buy, because the market pullback. Yes, we got our 0.7 Fibonacci, went up, then we have a kicker that solidified. We should stay away from the market. All right, let's ride on and see what we need to do with another asset, and this is Ethereum. If you remember, I told you about Ethereum, that Ethereum created a new low, and I gave you a buy of Ethereum around 2007, because we have a structure that did, because one of the rules is when you have a structure and the structure didn't validate, you can buy by 0.78. So I gave you the entry, I remember 2017 or 2015 thereabout, and the market went up, didn't create any invalidation, push back, and we got out at 3,280 thereabout. That's where we have a kicker, and you can see